Hello everybody, welcome back. So no video in the corner today. This is probably going to be a very fast video. It's me and the kids all day, and they're wild. So I'll run through this real quick. But first of all, I don't think there's a great deal to be concerned about. I appreciate that there's a lot of bearish sentiment going on right now, and that's part of the reason why I don't think it's going to come off that badly. I think it's a bit of a buy the dip opportunity, whether it's this dip or maybe down to maybe about 23,400 or so. But more or less now, in all fairness, now I'm not suggesting you go and buy this dip. I never would suggest you buy anything. You've got to make that decision yourself. But the reason I say this is not just particularly about Bitcoin and its $24,000 support, which again, closures on dailies are what is what counts. And this is also backed up currently with a 10 exponential, which is a decent moving average to be backed up by. I mean, it's not the strongest, but it's certainly not the weakest. And we're going to continue with an uptrend. This would be the place to get it. If you have a look at the momentum so far, still on the uptrend. I mean, obviously this RSI today on the daily means nothing until the closure, so we can see that we're coming down to revisit it once again. No big deal for the moment. If we bounce, fair enough. If we go down in the short term, fair enough. It's about the closure today, and if that's fine, then I imagine we'll continue upwards. And again, the destinations are 26,500 and maybe even 28,000 still on the cards, but it's a big day ahead. It's day one of traditional markets being opened. Nice little segue there. Let's have a look at Nasdaq, because this is where the importance is right now. So first of all, let's have a look at oil. Oil breaking down. There's been a bit of a breakdown across all commodities today. Oil taking the plunge as well. So fair enough. I'm probably about to get stopped out now. Actually, don't worry. Stopped out at profit at just break even, probably break even. But yeah, I mean it is what it is. We didn't get that energy. We've not had it yet. Doesn't mean that we can't get it. I would look for a deeper retest before I try and long this one once again. Probably 85, I'll try it again. But that would be the main thing to focus on for any kind of major pullback on stocks and indexes and Bitcoin. It would be the inverse way that we can play these charts against each other. Didn't work out this time. We'll keep an eye on it for next time. So fair play. Let's go back to stocks then, shall we? So mainly the major indexes. Get off the hourly chart because we're not ready for trading that kind of stuff today. So this is where we closed last week. So a pump signal on the Ichimoku cloud on the daily. So this doesn't mean it pumps immediately. I know that those pump signals that Jasmine's been generating with the Ichi cloud, they generally do pump immediately. But for this, for on a daily, you really would be looking for about four to maybe even a full week, so 4 to 8 days maybe for this to play out. So it might not even start this week, but it has been solidified, and that was done on Friday. So we got that closure. That is a signal. It's an appropriate signal. It's been done more or less outside of this resistance here, but we could easily come down to a 10 exponential, just like our friend Bitcoin's been doing. We do have bearish divergence, I have to say, but it's kind of cancelled out on this last little run up, which is good. It doesn't mean it can't follow through with a bit of a deeper pullback, but I'm okay with what I'm seeing here. Any pullbacks on stocks and indexes and Bitcoin and crypto, I suppose, could be viewed more or less as a buy the dip opportunity, given the fact that we've got this signal and we're above most moving averages of significance. It's only that 200 simple moving average, which is around 14,000 on the Nasdaq. So if you just go to, it's not the pre-market, but it's the CFD traded Nasdaq that more or less runs on a 24-hour period, more or less. And we're a little bit down. We're 0.5% down, so no big deal. This isn't the real market. The real market will begin later. The real market exists in oil right now, and as we see, the oil market is coming down. So if we expect the inverse effects from oil and risk assets or just stocks in general, then we should be expecting a dip to be bought. Now, if we don't and we see everything come down, it just means a deeper dip to be bought. I am not looking for an enormous collapse or crash. We should be thinking, however, though, that we might get a reaction once again around 87.72. So only $1 difference from where we are right now. So much of the market will be decided later on today as US markets open, which isn't going to be for a handful of hours yet. And when they do open, they will tell us exactly what's going on. But for the moment, we're more or less in a decent position, I would say. I wouldn't be particularly concerned at this very moment in time. Bitcoin is just pulling back after having, well, reclaiming a variety of different areas. It just can't handle that $25,000 zone. Now, if we turn our Bollinger Bands on, you can also see that that's a Bollinger Band top, and you get sucked back into a Bollinger Band when you come out of it. Bollinger Bands were pinching at the time as well, so this generally would mean that volatility is about to kick in. So that could be a big roaring move to the up or a roaring move to the down. So far on the daily, the momentum and the position from the price to moving averages is in the bulls' favour on the daily. And that's good. Momentum, again, like I say, is hanging around that support. Now, we'll just, as these kids seem to be letting me work for the moment, let's take it to a 4-hourly. So the 4-hourly, you can see a perfect retest of that support level, 23,800. That's been the area of significance since we reclaimed it. That used to be our resistance. Has probably now, from what this looks like now, it looks like a retest of what could be a support. So that's quite reassuring on the short-term time frames. We need to reclaim 24,400. That's your Bollinger Band center on the 4-hourly. That's something we'd really need to start to see today. And as far as momentum is concerned, it does offer further downside on this one, but being above a 200 exponential, which is around 23,200, is still a good place to be. So long story short, American markets need to open. Once they've opened, then we'll know a lot more about how we're going to stand with this crypto market. If you're looking at the crypto market on its own, it seems like it's retesting these areas of support. If they hold, then great. That's basically a bullish retest, and the next levels would likely be, well, first of all, 25,000 needs to be reclaimed and burst through. If we get through that 25,000, it's almost certainly going to go back up to that target that we've had on the map for about 4 weeks or so now, 26,300. Now, if we just finish off with the weekly, the position on the weekly, you can see the 200 exponential is the $25,000 zone, which we've had a bit of a problem with. So the 20 simple moving average, which is obviously what everybody's been going on about this whole time. So 200 weekly, man, 200 weekly. It is a deal. It is a fair old thing to be above or below it, but I prefer exponentials on crypto. Because exponentials are exponential, they move faster, as does crypto. So for a more volatile asset, exponentials seem to work a lot better. Again, this is a weekly, so even for an exponential, it's not really doing a great deal. But you can see that once breaking above this level, to be honest with you, all the way up to the top over here, 28,000, where you got your 21 exponential, you got your 20 simple, which is your Bollinger Band center, and we've got the summer lows. That would be, if anyone's going to short anyway, I mean, that's where it's going to be. That would be it. That would be the place to go from. But the momentum on the weekly still seems quite good. Money flow index not overheated. RSI still quite good. Bullish cross with the second one in the making. All not too bad, to be honest, on the weekly. So I would still favour further upside for Bitcoin, and if we do get up to 28,000, that's where we should start to get a little concerned about how hot and how hard this resistance level is. Because if we do get rejected from here, which is a very, very likely possibility, then back down we go. Probably back down significantly. Now, if we form like a low around 21,500 or so, or even come down to 19,000, that's fine. That's fine. Those are dip buying opportunities. As we move into September, that's the earliest that we'd expect this bear market to come to an end for Bitcoin. Latest, I would imagine, being December, and then basically a new bull market comes in. So on a chart basis, the long-term time frames still seem reasonably bullish, I would say. The short-term time frames are going to be decided when American markets open later. So if you've got the balls, buy the dip. It might not work, but it could. Oil breaking down makes it look like when the American markets do open later on today, that they will have a positive response, especially with the bullish signal that they got given on the NASDAQ last Friday. Right, thanks for watching, guys. Hope you have a nice day. Take it easy.